Welcome to Toronto Centre's special webcast on closing the gender gap in finance, focusing on the role of regulators and supervisors of financial systems. Hello, my name is Babak Abbaszadeh. I'm the President and CEO of the Toronto Centre for Global Leadership in Financial Supervision. At Toronto Centre, we are committed to expanding women's access to financial services as a way to improve their economic empowerment through employment and entrepreneurship. We were established in 1998 to promote sound financial governance, financial stability, and financial inclusion by building the capacity of financial sector regulators and supervisors primarily in emerging markets and developing countries. Women's ability to save, borrow, and control their own money and insure themselves and their assets is critical for poverty reduction and sustainable economic growth. Innovations such as digital finance help increase access to poor and rural women. We believe that by putting in place sound regulatory and supervisory systems that ensure consumer protection and look at sustainable economic growth can reduce the gap that women face in using financial services. Toronto Centre is very pleased with Canada's new Feminist international assistance policy that puts women and girls front and center and promotes their equality and a fair treatment in order to promote sustainable development, reduce poverty, and help achieve the goals of the UN 2030 Sustainable Development. We support Canada's vision as articulated by Minister Bibeau that international sustainable economic development and poverty reduction really is not possible without empowering and valuing women and girls. Closing the gender gap in finance is not just a preoccupation of the developing world. In advanced nations such as Canada, Sweden, and elsewhere, these are important issues that policymakers and others are grappling with, whether it be in the corporate boardrooms, workplaces, or everyday life. In this program, I will be interviewing strong women leaders in financial governance who have a valuable perspective on gender. Thank you. Maureen has had a distinguished career in addition to her leadership role at the OSC as a Senior VP for Surveillance and Compliance at the Investment Industry Regulatory Organization of Canada, or IIROC. She also held senior positions at the Toronto Stock Exchange and a 20-year career in the mining and resource companies. Maureen, it's a great honor to have you with us today. We know you have a strong commitment in this area. Can you just tell me, why is this issue important to you?
Well, it's important to me for two reasons. First of all, I'm a regulator. Second of all, I'm a woman who's been in business for almost 40 years. So if I talk about it as a regulator, the first thing I want to say is governance of companies in the financial sector is of utmost importance. And to have good governance, I mean, governance is about rules and procedures and policies in companies that manage the interaction between shareholders and management and all the other stakeholders. So we looked at all of the various companies, issuers and registrants, and we started to see issues in the governance sector. And one of the biggest issues we were seeing is groupthink. So when you start thinking about groupthink, you have to think about diversity. And so diversity at the board table, diversity of thought, of background, of leadership styles, of all kinds of experience is very important. And so I had to say, as a regulator, it was really important to have a diverse board. Once you have a diverse board, you start having different kinds of conversations. Second of all, as a woman in business, what I was seeing is a lot of young women starting out in these businesses, getting to middle management, and not really having a way to move forward. And I think part of the issue is it's at board level, at senior management level, collegiality plays a very important role. And what we're seeing also is that leadership styles, one kind of leadership style is generally preferred over others because it's comfortable. And so it's very important, I think, in encouraging diversity at all those levels, not just at the board level, but at the senior management level, that you start thinking about different types of people, To me, that is diversity, and that's why I'm pushing this.
Is setting targets important? And if so, does the OHC itself have gender diversity targets to ensure that more women have the opportunity to reach top leadership positions here?
Actually, we haven't set formal targets, but we have set informal targets. So I just want to say that our rule didn't set targets, but what we felt was that we wanted to have an equal or fairly equal representation. And so we decided at the board level and also at the senior management level that that's what we would shoot for. In our executive management team, we have 45% women. At the board level, it's 47%. In our executive team that actually leads the business, we have the CEO is a woman, the chief administrative officer is a woman, and one out of the two vice chairs is a woman. And what we see is a totally different kind of conversation at both of these tables. And I'm very proud of what we've achieved. And it also encourages others in the organization, because what they see is they see themselves at the executive team table.
And can you tell us about the OSC's disclosure requirements? I also understand that's called comply or explain model, and how they help promote gender diversity.
So as I said, we were worried about this groupthink discussion, and we were trying to encourage more diverse conversations at the governance tables. We started off in the summer of 2013, so in June of 2013, had a conversation with the government. We managed to put a draft rule in place by January of 2014, out for comment. And it was finally in place at the end of 2014. So that was quite rapid, considering that we had to do this across Canada. One of the things that we wanted to do, this comply or explain rule, it's actually a disclosure rule, and it's part of our governance rules. And what it said was, at every end of year reporting for all Canadian listed companies on the TSX, so the senior board, they would report on the number of women on their board, the number of women in their executive management team, whether or not they had policies and procedures in place to encourage women at both of those levels, and also whether they had targets. We're now in the third year of that reporting. Started out, we were 11% women on boards. Each year since then, we've gone up 1 percentage point. Only one.
Wow.
So think about that. In a country where graduates at business school are 50-50, law school 50-50, accounting, and yet at the board table, the progress is very slow. And part of this is culture, is just many boards, they appoint through their own networks. And so what we're trying to do is challenge those networks and say, you need to look at the women who are qualified and think about bringing them on your board. And this is not an issue of not having the qualified women out there. They have director-ready women registers in Canada where there's approximately 2,000 women of all different backgrounds that are board trained and board ready. So this is an issue about reaching out and trying for a different form of leadership.
So, in your view, and I know you belong to some international organizations, what are other countries doing in this on this issue, and how does Canada compare internationally?
Internationally, this is the kind of the way it shakes out, so that you can mandate to have more diversity on the board, or you can set targets for more diversity, or you can just go with a disclosure. And so what we're seeing in Europe, they set quotas. And so they said that there's going to be 30% women on the board. By setting a quota, they said, and if you don't reach that quota, you will be delisted. That's what they did in Norway. And so everyone met the quota, or the vast majority of people met the quota. Which was great, and they started to have different conversations. However, it had to happen so rapidly that many women were overboarded on many boards, or had some original involvement with the company to fill in the quota. The other downside of the quota was that whatever the quota set, that's what they did. They didn't go beyond it. It didn't translate into more female chairs. It was just board members. And it also didn't translate into any changes within the management of the corporation. And so the feeder was not put in place. Others set targets and said that these are voluntary targets, but these are targets you're going to be measured against. And the UK is one of them, and so is Australia. And so they started reporting towards those targets, and we've seen a big change in that. There's also a lot of the companies who set these voluntary targets, the countries that did that, they ended up with a lot of success when they had very influential business leaders stand behind these targets and walk the talk. And so that really helped. And then many other jurisdictions went with disclosure, which is what we have done. But in Canada, what we're doing is we're saying that we're going to do this disclosure-based regime for the first 3 years. We're going to measure our progress, and then we're going to decide what we need to do going forward. So many countries are on this journey. The countries that are on the journey are there for a very specific reason. They want to have better performance. There is more and more research out there now that is showing that if you have more diverse conversations on the board and you have more women on your boards, that you actually have better performance. There's been a study just released by CIBC that showed 1 or more women on your board, and it compared to like companies in the same sector, ended up with earnings and performance 300 basis points higher. That's substantial. That's the difference between a well-performing and a poorly performing investment.
That's an impressive number.
That's an impressive number. We also saw that there was the Peterson Institute study. There was a 15% better performance on revenue. So with women on the board. And so what we're seeing are more and more studies that are showing that. But even absent the studies, the idea of having an economy where 50% of the population is ignored, just ignored and not utilized as the part of the brain pool just makes no sense. Because we're in a global business now. Everyone's in a global business. You need to find the best and the brightest, and that means you need to just cast your net as wide as possible.
So in a sense, with diversity comes greater awareness of different kinds of risk, different ways of looking at strategy,
Yes.
different ways of measuring, so it's all these benefits coming.
That's right, asking questions differently, different probing styles, and what happens is you end up having a much better appreciation of risks and opportunities.
Can the progress that the OSC has made in this area serve as a positive example to other jurisdictions?
I think we've charted our way that works for the Canadian landscape, but I think the issue is that no matter how open or conservative your culture is, it's important to really look at diversity at the board table as an important aspect of good financial performance and growing the economy. And so I would say that whether you're looking at mandated targets or you're looking at voluntary targets or disclosure-based regimes, it's important to get on this track and start looking at trying to better the boards in all of our countries, because good corporate governance means good conversations, and all of that leads to better performance, and we all need that.
What else can be done to increase the capacity of these regulators and supervisors to become more, not only just sensitive, more savvy in this area of gender equality and closing the gender gap?
When we're looking at governance as regulators, which is a core part of our business, we have to start thinking about looking at the constituency of the boards that we're seeing and looking at the kind of decision making that they're undertaking and call out groupthink. I think it's important. I think governance is such a fundamental piece of the public regime, of the public company performance, that we have to make sure that when we're seeing things that aren't good governance, that we actually comment about it.
Maureen, thank you very much. These were very helpful and thoughtful comments, and I'm sure our audience will appreciate them. Thank you very much.
Thank you very much.
It is my pleasure to be here in Washington, D.C. at the World Bank interviewing and introducing Ceyla Pazarbasioglu. Ceyla is the Senior Director of Finance and Markets Global Practice at the World Bank. responsible for financial stability, financial inclusion, and contributing to sustainable development. Before the World Bank, she was at the IMF, responsible for regulation, supervision, and crisis prevention, as well as many FSAP initiatives as part of the Monetary and Capital Markets Department of the IMF. From your perspective, what is the situation today globally with regard to gender gap in finance?
So, thank you, Babak. It's a pleasure to have you here as well. Let's unpack this a little bit. When I think about finance, gap in finance, there are three issues that come to my mind. First is participation of women in financial institutions, either as managers or staff or as on boards. Here, women don't do so well. Less than 10% of all U.S. fund managers are women, and only a handful of women are CEOs of major banks. But we actually do better when it comes to cleaning up, which is interesting in this context, but there are many examples of female supervisors who then clean up the banking system, like we saw recently in the case of Ukraine, or the single supervisory mechanism in Europe, and in my country, in Turkey. And the third issue that comes to mind is actually the participation of women in the financial services in terms of access to financial services. And that's the issue which I would like to concentrate on, given the inspiring mandate of the World Bank to eradicate extreme poverty and promote shared prosperity. Here, if you look at the figures, it's not very inspiring. We are working on it, so there's hope, optimism, but right now, about 42% of women worldwide, it's about 1.1 billion women, they remain outside of the formal financial system. And according to World Bank's Global Findex survey, the gender gap is highest in the world's poorest countries. On average, the gap is more than 9 percentage points. In some nations, it's actually dramatically higher than that, going up to 25-26%. By contrast, in high-income OECD economies, there is no difference between men or women's access to financial services. So there is a big gap in many of the poor countries that we have to do a lot of work on.
I also interviewed Maureen Jensen, chair of the Ontario Securities Commission, and they're grappling with this issue as well. So Ontario is an advanced jurisdiction, as you know, and has an economy that is as large or larger than Sweden and Denmark, and yet trying to close the gender gap is an important issue in the context of advanced nations as well. So this is a universal issue. Why is closing the gender gap in finance so important?
So there are, again, we can look at it from the three perspectives. I remember very well when Christine Lagarde, the head of the IMF, asked the question, what would the world look like if it was Lehman Sisters rather than Lehman Brothers? And actually, colleagues of mine at the IMF did some work to see if there is any difference in terms of risk aversion of women or different behaviors by women. There's not that much concrete, robust evidence. I do think it's very important to have, at the board level, at the supervisory level, financial institution level, diversity of opinions and perspectives. In terms of access to finance, I think it's really critical to have inclusion more broadly. 50% of population roughly are women. So it should be that they do have access to financial services like everyone else does. And we have seen this recently with the backlash against globalization and so on. So we do need inclusive growth. We do need inclusive finance so that women have the same access to financial services as men, as they are critical in terms of creating jobs, creating education opportunities for their children, health related issues, and so on. So I do think it's very critical for us to be able to have shared prosperity and inclusive sustainable growth. More diverse perspectives are always good. So having female voices around the table and male voices around the table undoubtedly leads to better and more efficient outcomes. So I think from that perspective, it's important to close the gender gap in terms of women participation in financial institutions and regulation of financial institutions. In terms of access to financial services, I think this is really critical. because we have seen recently all the backlash against globalization and trade flows and so on and so forth. And we will not have a resilient and sustainable banking system unless we make sure that they have the access to financial services. And that doesn't mean account use only. It means savings accounts, it means insurance, it means access to responsible credit, not just access to credit, but responsible credit. But this is the only way that women can also contribute in terms of jobs, employment, entrepreneurship, education of their children, health, and so on. So I do think it's very critical, and for us at the World Bank, this is a key goal to ensure that we have finance for all, not just few.
Canada has just recently introduced its Feminist International Assistance Policy. I don't expect that you would have read it, but at least from the title you can see the emphasis there. So in practical terms, let's just focus on one group, regulators and supervisors. What can they do to improve the situation?
So as a former regulator, what comes to mind is, why should a regulator care? Because the mandate of a regulator or supervisor of a financial sector is basically to make sure that the financial system is sound and resilient. Financial inclusion is not necessarily the mandate of most regulators. But as I just said, we learned the hard way that we need to be inclusive. For growth to be inclusive, finance has to be inclusive. And that requires access by all to financial services. So that's why I do think that inevitably it has implications for stability and resilience, and therefore regulators, supervisors should care. What can they do practically? First, they can help remove regulatory and legal obstacles to women's financial inclusion. This is not just regulators, but broadly authorities, for example, in terms of property ownership by women, in terms of access to formal credit, in terms of engagement in economic activity. There are usually barriers to women in terms of legal or not having access to ID, not having access to collateral. So that first one is identifying and mitigating the legal and regulatory obstacles. Second, related to that, they can improve the financial infrastructure to reduce gender disparities. This could be, for example, movable collateral registries, which makes it easier for women to have access to credit. It could be credit bureau data and big data and other information which helps them develop a credit history and therefore demonstrate their repayment capacity and allow them access to different types of financial services. Third, regulators and supervisors can work together with the private sector to enable access to digital financial services in a responsible way. Of course, opportunities and risks are there, but this digital finance brings a lot of opportunities in terms of easier access. Women usually have time limitations because they are multitasking, taking care of the family, education of children, and if they're also working. So therefore allowing them to receive and transfer money safely, which is a key concern in some jurisdictions, and conveniently from their own communities, businesses, and homes will go a long way in allowing access to women. We've seen this in Bangladesh, we've seen this in Kenya. Mobile money services have increased access of women to financial services. Fourth and finally, in order to design good policies and strategies, we need to understand and diagnose what the problems are, and therefore we need to have much more information on gender gap, and especially in terms of types of services, financial services, that this is an issue. So we need to strengthen our knowledge base and database information base in order to have better policies.
I think what you just said is a fantastic way for us to do an action plan on gender. And tying some of the various strands of what we talked about, you talked about more than 1 billion women not having access to banking services. And everything that you just talked about is about empowering women to be able to have the ability to save, borrow, control their own money, insure themselves and their assets against loss, which ultimately contribute to poverty reduction and sustainable development. So thanks for that. What else has the World Bank been working on with its members countries that you think can help improve the situation?
So for the World Bank, this is a key corporate goal. We have this Universal Financial Access 2020, where we have a pledge to have 2 billion unbanked people to have access to transaction accounts. We have been working very closely with IBRD and IFC, jointly working with the private sector to achieve this very important goal. Access to an account doesn't mean financial inclusion. It's a gateway, it's a start, because that will then allow, hopefully, access to services like we discussed in terms of savings, hopefully responsible credit, insurance, and so on. So we are very strongly committed, and UFA 2020 is a key goal for us, including aspects of broader access to financial services. We have also been working hard with countries in terms of building collateral registries, movable collateral registries, credit bureaus, and development of international standards to allow for mitigating some of the impediments that have been in the way in terms of access of women to financial services. We are also working with Data 2X. This is an initiative of the United Nations Foundation, and this will be really important in focusing the information base in terms of gender in country-level financial data. And finally, we are collecting the third wave of data for the Global Findex, which provides sex disaggregated demand-side data on financial inclusion, and we hope to finalize it by the end of the year. So these are the key efforts that the bank has been working on in terms of financial inclusion generally, but also in financial inclusion of women specifically.
Sounds like you're very busy.
It is a busy agenda.
In closing, I wanted to thank you and also acknowledge that you're not a stranger to the financial sector supervisors and regulators. You're known around the world, and we feel very privileged to have you on our board. And most of our viewers may not know, but the World Bank was a founder of the Toronto Centre, so we're very appreciative of World Bank's continuing support and your role in that. Thank you.
Thank you, and we are big supporters of the Toronto Centre. You're doing a great job, and this is a very important agenda. As you said, there are opportunities and risks, and there's an important role for the World Bank and partnering with the Toronto Centre.